Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center in Louisville. Discover no-cost, valuable business services to help you thrive, whether starting your entrepreneurial journey or scaling your existing business. We have the resources and expertise to help you succeed. For more information, please visit our website or text 502-977-5800. Thank you for joining us today. Feel free to use the chat feature to ask questions or engage with our speaker. Let's get started.
Hey, welcome everyone. Welcome to another Toolkit Tuesday. I am so happy that you're here today. It's going to be a big day. But before we get into that, I'm Dave Etke. I'm the director here at the Louisville Small Business Development Center. I'm also joined, as always, with my good friend and coworker, Janet Flaw. Janet, how are you today?
I'm doing pretty good today. It's nice and sunny here in
It
Sellersburg,
is.
so it's nice, even though it's
Yes,
cold.
and I can see out across Louisville, Kentucky, high atop the tower, the PNC Tower here, where the SBDC studios are located. So big day here. Thanks for joining us. We are the Small Business Development Center group. There's a lot of, we have a ton of business coaches that can help you navigate a lot of things with your business, loans and marketing, whatever you need. We're here to help. We'll send some information for you to sign up or engage with us later on. But before we do, just to make sure that you can see and hear me, I can see you guys kind of popping in here a little bit. But if you look at the bottom of the screen there's a toolbar. If you don't see it, just kind of hover it over with your cursor. It should pop right up. In there, you'll see the little chat button. Don't go to the Q&A button, go to the chat button. If you wouldn't mind, just to make sure that everything's working. We had a server outage earlier, so I'm a little concerned about all that. Just put your name and just tell us you can hear me and where you're joining from. I do like to see where everybody joins from because it's really interesting to me. Sometimes we get folks all over the place. There is Katie Startzman from Berea. She is an SBD coach and center director down there in beautiful Berea, Kentucky. So if you ever get in the area, just pop in and say hello to Katie. She's a great person. And Janet in Sellersburg. Okay, I can see the numbers out there. I know you're out there. I can hear you breathing. There's Michael. Hey, Michael, Louisville. Audrey, Crafting Emporium. I'm going to have to hear more about that. Sounds interesting, Audrey. Maybe you can share a little bit with that about your business here a little bit later on. Come on, I see the numbers popping. I know you're in there. Don't be shy. We don't, because this is what we're doing today is pretty interactive. It's not a thing where you just turn the sound up and look at video today. So you're gonna have to engage quite a bit. So I just want to make sure that you guys are looking and can see and hear us pretty well. All right. So we've got a great cast of guests today, and one of the main things that we do here at the SBDC is help you access capital for your business. What we do is hopefully help you get ready to access different lenders. Most times when you start a business, accessing a business loan or different forms of financial services are new, and it's just something you haven't done before. So it's important to understand the whole process to make it a successful experience for you. So I'd like to introduce our guests today. We have quite a cast of folks here today. We have Keith Eichelberg, Shelby Huber, and Chad Pearson from Truist Bank, one of the premier banks here in the eastern part of the United States, and also Jeremy Fuller, who is also a good friend of mine, and he is with Eclipse Bank. And so you guys want to just pop on, show yourselves, and say hello?
Hello.
All right. So
Good afternoon.
our goal here today is to let everybody tell a little bit about some of the cool things that are going on in your different institutions and how you can help the people, fund and grow their businesses, what are those services. And then the rest of the time that we're here together, it is you guys out there, just put your questions in the chat or comments, And then this is your opportunity to talk to these guys directly, introduce yourselves, tell them your problems, tell them what you want, or tell them things that you're thinking about, and let's get some answers today and just get it all out there. And um, this is a great opportunity for everybody. So take notes and don't be shy and jump in there. And hello, Brittany. Thanks for joining us today. So I think I'm going to start and go a little bit clockwise on my list, and I'm going to let everybody kind of jump in and introduce someone. So I'm going to start with Shelby. You're at the top of my screen. So Shelby, you want to say hello and tell a little bit about yourself and Truist Bank, what you do there?
Thanks, David. So my name's Shelby Huber. As you said, I'm a wholesale payments consultant, or better known as treasury management consultant with Truist Bank. And we help companies, or my role helps companies with working capital or cash flow management, payables, receivables, reconciliation, fraud and risk mitigation, and then liquidity management. So from a Truist perspective, that's kind of what I go out and help companies with. The bottom line is treasury doesn't need to be more complex. It needs to be connected, controlled, and built to grow with the business. The only way to do that is to have conversations about what are the companies going and what they're doing today. So that's kind of what I do with the banks. Thank you for having me.
Thank you. Jeremy?
Yep. Thank you, David. I'm Jeremy Fuller with Eclipse Bank. A smaller bank. I've got a lot of experience with larger banks. My expertise is in commercial lending and in particular the SBA at this point. I will echo a lot of what Shelby says. A lot of this, well, it's all very collaborative. Every business is different, and it's a matter of conversations and understanding what the client wants. And what I like to say, and I say to David all the time, he's probably sick of hearing it, but I like to translate, or my job, I think, is to translate what the borrower wants into what is eligible for the SBA, which is no easy task. But at our bank, my official title is sales manager, but I think it's important to understand that the best way to be good at sales, especially in lending and in particular SBA, is to have a good grasp of credit, and then also the SBA SOP and all of the rules and regulations there. So our goal is always to help get a package or a business plan or a deal together in a way that's eligible for the SBA, is going to work for the borrower as well, you folks, and want to do that quickly. If we can head something off that's not eligible within a day or two, that's ideal. Bigger banks, you'll tend to sometimes have things come up, 2 months down the road. It's our goal to recognize issues and roadblocks and speed bumps and address them early in the process. Thank you, David, for having me, and I think that pretty well sums it up.
Yeah. Chad?
Yeah, so Chad Pearson. I'm housed out of Bowling Green, Kentucky, at our Bowling Green main branch here. I'm a retail branch leader. I've been with the bank for about 4 years now. So I really help clients here at the branch level, mainly small business clients that are segmented under 2 million in annual sales, under 250,000 in lending needs. But I work directly with one of my partners here on this call, who we'll get introduced to in a second, Keith. We kind of work hand in hand with those clients. But from a branch perspective, really just helping small businesses from the start. We have a lot of entrepreneurs that come into our branch and, don't really know what direction to go, don't even know how to set up, checking accounts and business bank cards and all those type of things. So, that's really where my passion is really just helping those businesses get off the ground and getting those ideas into reality. So, some things, personally that I do here at the branch, for business clients, here at Truist, we're really focused on our digital experience. So allowing clients to be able to have their business wherever they are is extremely important to us, always having that connection in their phone or in their tablet. So we're digital first, but we're not digital only by any means. We have around 15 branches around the Louisville metro area, 1,500 branches in total across 17 states across the Southeast. So what I do with business clients daily here at the branch, a lot of fraud awareness, fraud prevention, fraud support. It's extremely huge right now. Help with wire transfers, cash processing, getting businesses set up for business savings accounts to be able to have cash flow needs met within that. So, and then I also pair myself completely being on the retail side with their personal financial needs. So, a lot of businesses become successful, and with success, we have premier and wealth teams that can help them as they continue to grow and become more successful. So,
Awesome. Keith?
Good morning. So Chad and I actually, we work really hand in hand. My name is Keith Ackberger. I'm a senior small business consultant at Truist Bank. I've been in this role since February of this year. And then Chad and I were partners. We both were branch leaders together before that. And I've been at the bank for about 12 and a half years. My everyday role is similar to Chad's with the business side. So I deal with clients 250 or less in loan amounts, up to $2 million or less in sales. And my everyday is helping those business clients get to where they want to be from a deposit standpoint, from credit card, lending, payroll, small business, merchant, treasury, all those needs from the small business side. My passion is small business clients. I love to take a new business owner and then figure out where they want to go, what obstacles they may have, and try to come up with a solution to what they want to do. I always say to clients, if there's a situation where we're doing a loan, it's not a no, it's just maybe not right now. So that's really what my passion lies around, is really helping the clients and being very consultative. So thank you for having me, and look forward to answering some questions. Thanks.
Cool. Awesome. So now's your opportunity, folks out there. You have any questions or concerns or just ideas, just put them in the chat so we can get those answered. But to start, I think that based on some questions I've gotten in the past, I've got a couple of questions I'd like to ask first to kind of get the ball rolling here. But going to Jeremy, can you explain a little bit about what the SBA is all about? Some people have some misgivings or misconceptions about the SBA. I think that quick overview would be very helpful on what it is and what it's not.
Sure, absolutely. We'll start with what it's not. It doesn't make it doesn't make a bad loan good. That's what it does not do. What it does, I guess I like to say that I get to pretend like I'm in private equity, but work for an FDIC bank. So what the SBA does is lets the bank do deals that it wouldn't otherwise do due to collateral shortfall or based on its projection based. Again, it's a lot like private equity, a lot of mergers and acquisitions, startups, a lot of deals where, again, it's just a collateral shortfall. And that is it in a nutshell. That's very oversimplified, as David knows, but I think that pretty well covers it. It's not going to be something where you've got a poor credit score or something like that. It doesn't mitigate that. It's strictly a mitigation for a lack of collateral or a projection-based deal.
Yeah. Okay, folks out there, it's your show, so don't make me ask all the questions because I will. But Chad and Keith, let me ask you this: both of you guys focus on small businesses with lending needs less than 250, and that is a huge market, especially with the folks that we deal with. Sometimes. I read somewhere that most small businesses are started with less than $10,000. Seems like $10,000 is that sweet spot to get you over the hump to get going. But it's also the hardest amount to get because I think, correct me if I'm wrong, but as a banker, you have to work just as hard for a $10,000 loan as you do a $10 million loan. So, so how do you guys help small business, either start or grow their business with smaller amounts, under 250?
From my standpoint, so I do this all day long, but it can be, I'm not going to lie, it can be a very easy and sometimes very complex. So like you said, we do have to fight for, a small loan, just like we would a huge loan up to 250. It just kind of depends on the situation. Number one, do you have any collateral that you'll be able to use? Are we doing straight unsecured? Things like that. From a brand new standpoint, so we look at a business owner, if you're established 2 years or less, as where we may have to use collateral. We may have to start either with a business credit card, depending on the amount you need from the 0% standpoint. Or if you have collateral, we can utilize that, whether it's liquidity, primary residence, owner-occupied building, things like that. But it's big on, for me, if you're coming to me less than 2 years, it's big on the conversation of, okay, what are you comfortable with? What can you put as collateral, if any? And if that answer is no, then we pivot into other avenues to see what we can do for you. Because that is a big request. I only need $2,000 for like a few weeks just to get me by for this, and then we kind of just pivot on that conversation. So really making sure that we kind of lean into what area you're focusing on. And if the collateral is not able to be used, then we focus on what our backups are. Because it can be a little bit difficult with certain standpoints, especially under those 2-year marks.
Yeah. Chad, do you have anything to add?
No, I would just say, a strong personal credit history definitely always helps our situation when we can use that client as a guarantor. So really ensuring that you have those pieces of the puzzle kind of in place to get things off the ground going is definitely a big plus as well.
Okay. So Audrey asked, how do you know when to ask for funds? Is a loan actually like digging yourself into a hole before you possibly need it? So maybe you can give us a little more clarification there, Audrey, but I'm assuming that you're already in business. Maybe it's kind of like working capital or something like that. So maybe Shelby, you can weigh in on that a little bit, maybe?
Sure, or Jeremy may have some, information from an SBA's perspective as well. I think you have to look at that. So let's say it's an established company and you're trying to determine, does the loan make sense to expand the company, or can you find working capital within your cash flow process? And maybe it's both. Maybe it's a smaller loan and you extend your payables and reduce your receivables. Payment days on hand. So days payable, sorry. Those would get you some of that growth within your own organic growth. Some of it may be a loan. And then when you're thinking about it as well, a great conversation to have is, what are loan rates today? Are those going up? Are those going down? What's the value of that cash on deposit? Is that going up or is that going down? So it's really not necessarily a conversation about creating a bigger financial whole. It's, what does the business need to grow? How fast can it grow safely? And then what funds are needed to kind of bridge that cash flow gap between, your inventory, if you have inventory, and that collection point. So that cash conversion cycle. So I think it's really almost personal to each business on what that needs to be, when it needs to happen, and what kind of dollar amount you need to ask for.
Jeremy, you have something to add?
That's great. That's one of the points I was going to make. An example, I just had a borrower come in. It's a client of the bank looking for $400,000 that they need to grow. And frankly, the only thing I looked at, I asked for their receivables, and they have 450,000 in aging receivables over 90 days. I said, well, there you go. Let's collect it within 90 days, and you don't need to borrow. We would love to do a loan, but let's try to balance this. As Shelby said, that's perfect. Otherwise, it is key to remember commercial lending or business lending is different than personal. It's always need based. There's gonna be a need there. I need an excavator to get this other job. Well, that's where we can come in and help. And it's a matter of return on equity as well. So just borrowing like a lot of folks do on the personal side, just put a HELOC out there just to have it. That doesn't work. We won't do that. With commercial lending, it's going to be you got to have identified a need and understand how leveraging that will produce revenue and profitability.
Yeah. Shelby, let's take a little left turn here. Maybe because everybody's kind of mentioned it a little bit, but you did first. But talk a little bit about treasury management. What exactly is that?
Oh, treasury management. You're going to ask me to define that on a call. I wasn't ready for
Yes.
that question. Thanks.
You know it when you see it, right?
Yeah, you know when you need it. Basically, every company, business, small business, big business, commercial client, whatever it is, all companies need cash management. Basically, what it does is it tracks the movement of funds coming in and going out of the company. From there, you're going to do your accounting documents like your financial statements, your income statement, your balance sheet, those types of things to tell you how the company's moving. So treasury management solutions can help with direct deposit, right? You want to do ACH and get it right from checks. It can help you with reconciliation instead of copying information out of an online system or from a bank statement and getting it into your financial system. Perhaps it's a file, which reduces time, right, and error and other types of things. Maybe it's fraud risk mitigation where you want to close the gaps on potential check fraud, or at least have more protection than nothing that you have today. It could be managing, your working capital again, looking at how do I, right, stretch my days payable? How do I pay in 90 days instead of receive in 90 days, which usually works the other way, right? People want a longer pay from the other side, which makes your receivable longer. So just kind of getting your arms around that solution support, getting your arms around that and help companies, businesses, small businesses, whatever it is, really get their arms around that and make educated decisions on what the next growth step for the company is. You can't make a decision if you don't know where your financials are. If you don't know where your financials are, you don't have the ask for Jeremy to put in that line to say, okay, this is what I'm asking for. So it just really helps with the entire business plan. So cash management helps with that. It's basically the workings of the finance office.
Okay. All right, Michael, just thanks for that. That was a very good explanation. And I guess the message is that really you guys are a resource for people. You can help, small business owners navigate a lot of things that they might not have even thought of. And then, having a conversation with you guys and coming in and building a relationship with your banker is super important that I think a lot of people don't do. I think often I see where it's like almost a minor adversarial relationship, like, they have the money and I need to get it, but they won't give it to me sort of thing, But you're actually, your job is to get people money. You just need to make sure you do it in a right way, and you're here to help and you want to do that. So you guys don't look all that scary, I think people can access you guys pretty easily. So, all right, Michael says, I need 700,000 total, 150 to start, which would be lease, architect, licensing, 400K for facility rehab, 150 for startup operations. Should I apply for the total amount of the project or request in phases? Who wants to take a stab at that one? That's a good one.
I'm happy to, if you like. This is an interesting one. David, this is one that you and I would collaborate on, and
Yeah.
it's a matter of coming up with a project, but it would be all at once, I'll assume a few things here. It sounds like you own the building already. It looks like it's just to expand and rehab the facility. So some of this, unfortunately, and this is one of the hard conversations, some of this is going to have to be out of pocket at first. If you do own the building and it's an expansion, ultimately the SBA can do 100% financing, and that's going to be dependent on a few things, including the health of the balance sheet and so forth. But you're okay. So it's leasehold improvements. So that becomes a little bit different. We would want to have some discussions. Back to collaboration, right?
Right.
What's the situation here? That's a lot of money to put into leasehold improvements. So understanding that, but assuming that decision's been made and it's a good investment as opposed to buying a building that maybe fits better, then we build out a project, and that's what David's help. And part of the project is and I see you put lease on there now, looking back, but the architect and the licensing and plan specs, drawings, permits, all of that, including the materials and the work through the GC, it counts as the project. And ultimately, maybe you're out 20, 30 grand for drawings. That will be reimbursed to you at the end once it's approved and funded. But that's a project right there. David, is that these are so project specific. It's hard to get much more than that, but you find a team, including the SBDC and a bank, SBA or otherwise, that can that's seen these. I like to say to people, I've never started an operating company. I've been in rental, investment real estate and that for years, but I've never put my skin in the game and done an operating company, but I've looked at thousands of them. And I think what I enjoy is leveraging all of these that I've looked at for 20 years, the good, the bad, the ugly, the way more declines than approvals, and leveraging just little nuts and bolts that I've learned from each of them to help you and folks that interact with me to have a successful project, even coming down to which municipality. Oh no, that building department's awful. Let's start now, right? That kind of thing, which I get a kick out of, adding value in that way. And I think that's what is common with all of us on here. What drives us is the value add that we can do and add to whatever it is that you need.
Yeah. Anybody else want to weigh in on this one?
For me, that is over my segment, but I kind of echo what Jeremy was saying. We have our SBA lenders as well that we refer to if that is over what I'm able to do. But yeah, it is very complex. I would say that, like you said, Jeremy, kind of situational based, looking into everything we can do. We go specifically on the small business side. We take it back to our underwriting team, give the situation. They give, is it a yes or is it a no, kind of what we can do from a structural standpoint. What I love, we will look at every situation, if it's a complex one specifically, and say, before we pull credit XYZ, are we even able to do this? Because we don't want to, take that credit into a factor. If we're just going to pull credit, it's not going to go anywhere. But yeah, unfortunately, that's over what I'm able to do. But I know we bring our SBA partners like Jeremy in there, and we will just take it situational base. Yeah.
I would add, if you don't mind, I see an additional comment there from Michael. That's interesting. I love the CPA certified projections. That's fantastic. You're well along in this. That's where we would look at those and probably kick those over to David so that you can translate them into what the SBA is going to want to see. So, which is maybe the biggest thing would be the first year being monthly projections. But yeah, it's projection based. It's an expansion project that does sound right in the wheelhouse of the SBA. And then just finding the right team of folks to work you through that. But it would be, back to your original question, it would ultimately be one loan. And you're going to have to be out of pocket a little bit to get those startup things like the drawings done and maybe even some permits.
Yeah. And I'll just weigh in, like my part in all this is collecting all the data, yes, financial, but also, industry analysis, competitive, analysis, just making sure that this is, as when we hand this up to like a banker, that we answer as many questions as we can before any of these guys would ask those questions, and the most important part and the hardest part in my mind is like in a projection, you can put any number you want in that income cell. Doesn't really matter. But what makes that real is what we call critical assumptions that we can use to validate what that number is. They won't ever be exactly right, but if we can get directionally right because of what we know, then that's a valid projection. And that's what we bring to the table. And we work with everybody here. We're really bank agnostic. We introduce people to banks, and bankers call us and say, "Hey, can you help us, guys?" It just goes back and forth. So we all work together as a team, and I guess that's the big message for me is you never have to do this alone. People will always help. All you got to do is ask and not be afraid of putting yourself out there and say, here's what I want to do, and can you help me do it? And what do you think? So, all right. So, Michael, Brittany, you've been quiet. You got any questions? I know you're there. I can see you. So, if you just have any questions, especially, I think it's kind of interesting, these questions that we get sometimes that are very specific to a person and their deal. I think that's kind of makes it fun to kind of bat this stuff around a little bit. So,
Something you said, David, somebody said it about competition or adversarial. Even the banks aren't adversarial with each other. I mean, every bank's can have a different appetite, and I'm not afraid of competition. I don't think anyone here is. And sometimes Eclipse may have an appetite for a project that Truist doesn't, and vice versa. So I have no problem, and any banker that does have a problem with you guys, the clients or prospective borrowers who are on here, or not even just borrowers, depositors and everything else, since we have treasury and everything covered. Every bank does have a little bit different niche, and go out and explore. And if Truist beats me, they beat me. That's fine. I want what's best for the borrower. Ultimately, I don't want to have to come back and take somebody's house, right? That's what none of us want that. So, finding the right fit and talking to as many people as you can is ideal. And I don't think any of us here, I've said it a fourth time, is worth it. None of us are scared of that or would encourage you otherwise. And if someone does, then you've got the wrong banker.
Yeah, exactly. Chad, let's talk a little bit about something a little bit not really lending related, but a little bit different. Like I work with a lot of folks that for whatever reason are typically, I would just say, unbanked. And they want to start a business, or maybe they're kind of messing around in a business and they're using Cash App or something like that. I mean, why would you tell them to come to a bank and get things going with you? I mean, what are the advantages to that?
Yeah, so I mean, I think that in-person relationship and consultative session that we can have with those people is critical. We see a lot of business owners every day, so we kind of see what challenges are in current economic conditions and current banking conditions, and as I mentioned earlier in the call, we kind of see a lot. I see a lot of diversity from what businesses are seeing from a fraud perspective, and it's it's a pretty big thing right now. It's unfortunately it's just in the situation we're in post COVID. It just seems like at post COVID it just really started to kind of ramp up from a fraud perspective, onshore and offshore. So working with those business owners, being able to protect them, being able to have that go-to when they have one of those situations arise, and being able to come in and sit down and speak with an individual and work through that. And nothing against online banks or online only banks, but having that direct connection to a banker to have that relationship with is a big part of what I do. So outside of that, really, like I said at the beginning of the call, also just pairing that personal relationship with that business relationship can be huge as well. That a lot of times they go hand in hand, especially early in the relationship. I see, a lot of businesses that have to use, personal capital or personal cash reserves to be able to get things off the ground and going. So not always our ideal situation, especially from a lending perspective. We kind of try to keep those separate, but I'd be lying to say that if I didn't have clients that use their home equity line of credit to get their business up and going, and ultimately that's their decision if they choose to do so. So for me, blending those personal relationships and business relationships, and like I said earlier in the call, also once that business begins to grow, once that becomes an affluent client, being able to connect our business partners with our premier and well segmented business partners. That's when it really start to get fun, and we really enjoy seeing those businesses grow at rapid rates like that.
Mm-hmm. Okay.
Hey, David,
Yeah,
do you mind if I add just a couple things?
absolutely. Jump in.
So you had asked, why a small business owner or someone using cash, kind of small business on the side, would look to use a financial institution to help them with that. I think a couple things stood out for me when you said that. I agree with what Chad said. I think that advisory piece is what you really gain. It's going to be hard to grow a business if you're just using financial advice and information from Google or the web or any other search engine. You can find anything you want, right? Is it applicable to what you're doing? I think the second piece of that, to really have growth, you're going to have a financial institution that's going to help you with just managing payments and receivables. It's real hard to do without a bank account. From that perspective. And then I think having a financial institution as a partner also gives your company legitimacy. And so it would also give you that ability to say, okay, this is where I bank. It's another piece of the puzzle, right? As you continue to grow and gain customers, then your business can grow, but so will your financial management grow. And as that grows, you're going to need more conversations and advice and, how-tos from Chad's perspective, either on the owner side or on the company side, and how do you bring that together? But it's real hard to do without having specific conversations based on each business. So I think that's what a financial institution like a bank brings to the table, is it's people who have been in the industry for a really long time to help you understand what's available so you can make the best choices for those growths. So that's why I think, just on top of what Chad said.
That reminds me of a conversation I had with a guy here in Louisville. He was retiring and had sold his company and for a lot of money and stuff. And I was just asking all about his story. And he said that he didn't really start making money until he befriended a certain banker who really, he said, taught him how to make money. So I think that's it just reminded me of that story. And I think that's a kind of a testament to what you guys are saying, that you guys are resources to tap into, and you're here to help these folks or anyone that's in business.
David, can I add as well, not to
Absolutely
prolong this, but just because I just like this, just because to add what everyone has said, it's really important, just because in my role as well, like I said, you have to have those great conversations with all you got approved. You may have to have, it's not right now, but it may be in the future. But also, like with Jeremy, with other partners and other banks, it's a good thing to have other resources, because you can have, say, we can't do this at Truist. Oh, Jeremy down there at Eclipse, he can do this. He can help you. You want to help each other, and you want to be able to know what your partners and colleagues can do that maybe you can't do. And also from that new lending perspective, like I am really big on, with a brand new business, you're starting up from scratch, having the conversation around what are your goals in the next 5 years, 2 years, whatever whatever it may be. Just because a lot of times, if you're thinking about a need, you may think about it in the moment. But what about, like, okay, sometimes they say with business it's a little bit more complex and personal, but like getting business credit established from the beginning, if you can, is really important, because it helps from, down the line. So getting that, even if it's a business credit card, you're just going to use your personal credit to get that business credit card approved, but it's getting the establishment there, right? So thinking about things that you don't always think about right now, but it could help you with down the line. If you think about, what is my plan in the next couple of years? What will I need? What can I do now to help, get me what I need in the next couple to 5 years? So I think that's great. So I just wanted to say that.
Thank you. Jeremy, let's go back to you and talk a little bit about how do you work? Like if Michael wanted to move forward with his deal, I mean, what are the steps that you would tell him to take to access you or any bank going forward, especially if it's an SBA loan?
Well, this is going to be a bit of a commercial, I guess. It's hard not to. I think the value that I add is in particular at Eclipse Bank, a smaller bank versus a larger bank, is that I do have the experience. Somebody told me early on, if I wanted to be good at sales, I better be good at credit and be good at the SBA SOP. I alluded to that early on in my introduction. So if you can find somebody that's experienced and really has a heart for the community and doing what's right for you, again, um, I've actually unfortunately been in the business long enough to see the downside of it, to see, where a deal that I've done has gone bad through no fault of mine or the clients or anyone's. Just frankly, it was in Cincinnati. The freeway closed and the business got no more people across the bridge. It was the 471 bridge up here when there was a fire, and the business went under, and we had to. They lost their house. I mean, it was a bankruptcy and everything else. So it's I've always been this way, but even in that, just always being mindful. And I said that a minute ago. We want to do the right thing. Sometimes the answer is no, but there's anything that, frankly, there's an alignment here with all of us. Anything that the bank does that's good for the bank is ultimately good for the borrower as well. And I think that's what's really, to answer directly David's question, you got to find somebody or multiple people at multiple banks that are approaching your project and your deal in that way. It really is in your best interest. And then, we look at what you've got, and as I said earlier, we want to. My job is to translate your wishes and your needs, and to kind of even look and understand what you're asking for that you don't even know you're asking for potentially, and then make it SBA and bank eligible. So make it so where your ask makes sense. There's a plan there. I partner with David and other SBDCs across our region, 3 states, Ohio, Tennessee, and Kentucky. I'll tell you, if you're in the Louisville area, Louisville is one of my favorite. That's not just blowing smoke. I mean, they do a great job. They're well thought out. I think David alluded to this earlier. You've got your projections that the CPA has helped with, and I imagine the CPA has helped with the narrative as well. But that's where David adds a lot of value, is building the story. And I think the SBA lending is really an art. It's not just about the numbers; it's about the story. Way more than conventional lending, which is all about 3 years of tax returns. Here's your collateral, and it works, right? SBA and expansion lending, mergers and acquisitions, and startups are all about the narrative, and that's where the SBDC is a great resource, is putting a robust narrative that makes sense and supports and explains the revenue lines and the expense lines on that on the P&L projections. And everyone starts from a different place. So every answer, there's no one answer for any of these questions. My job is to meet you where you are and catch myself up and figure out what the next steps are. So no cookie cutter to any of this, to what any of us do. And I could keep talking, David, but I'll turn the floor back over to you. I think I've answered your question there. Anything you want me to expand on, I'm happy to.
Yeah, that was great. Thanks, Jeremy. Keith, Chad, Shelby. I mean, how do you, when someone, a small business needs to come in, just get maybe $100,000? I mean, how best do you want them to work with you guys? What's the first steps? You're on mute there, Keith.
Sorry. Thanks. Caught that early. But I would say it takes it back to, like, all right, really expressing what the need is. So the biggest thing is, because every business lender, I'm sure, especially when the structure comes up, business is different than personal. So if you're like, okay, I want a HELOC, it's different than if you want a business line of credit. It's all about what the need is. How do you earn your revenue? How are you going to repay this line? Loan, what have you. So it's really just understanding what your business does, very complex, and then going into it, the underwriter, with a structured plan and knowing how you're going to have that repaid and what the purpose is. From being a branch leader, like into this role in February, like I did a lot of retail, but now going into business, it's a lot different. It's really, I love it, but you go to that underwriter with a story. This is what this client does. This is what they're aiming to do. This is what they're going to do to earn their revenues back, to pay this loan or line back. So you just have to, I hear a lot of, oh, I need $100,000 for working capital. And unfortunately, working capital is not a purpose. We need to know exactly what you're going to be utilizing this line or loan for. And the reason I say that is because I have underwriters come back and say, well, that's not good enough. What does the client need it for? And so it's a lot of that conversation. So I get a lot of that $100,000, maybe a little bit less requests. And it's a lot of just understanding what the need is. And then maybe, do you need this much? Do you need maybe more? And then we can kind of talk around those avenues. So, yeah.
Okay. Chad, Shelby, anything to add there?
The only thing I'll add is I think a good thing is if you're going to ask for the money, have your story ready, right? What does the story look like to you? What are you going to be doing? What is the goal? What is the outcome? I was thinking about Michael's question earlier about the $700,000. Do you all at once, or do you do it in phases? If you do it in phases, it doesn't make sense, because you can't be licensed if you don't have the 150,000. You can't do whatever service you're going to do if you don't rehab the facility. And then if you don't have startup operation costs, you don't have anything to start with. So they're really all three tied together. So I think understanding the story of what you're trying to build makes a really big difference in the ask. And then the ask comes down to, it's not $700,000, right? The ask is for each of those pieces individually. And then together, those tell the story to your financial institution or lender that's going to really put that together and then help you get there. Because to Jeremy's point, the bottom line is we want to see success. It's not that we want to help you be unsuccessful. So I think anytime you reach out to someone and tell your story, if they understand your story, they're going to be a great partner, right? If they don't understand your story or don't take the time to understand your story or where you want to go, then maybe they're not the best partner at that time and you need to find someone else. But I think from just reaching out, make a call, shoot an email, walk into a branch and say, hey, can you have someone call me that would work on this? And just start a conversation. If you don't feel good about the conversation, then find someone else. If you feel really good about the conversation, they become a trusted advisor. And then you can grow from there. So that's, I guess, my take on kind of that question.
Yeah, that was great. Thank you.
I could take that a step further if you don't mind. It's
Okay.
people, I've been told, well, you don't understand my vision. Well, I need you to translate your vision into revenue and expense numbers. So I get the vision, but let's talk this through. You can't jump from A to Z. We need the whole alphabet in there. So don't afraid to be challenged either. Certainly, if somebody's just shutting you down and being dismissive, that's not good to Shelby's point. But there's a whole middle there that needs to be filled in for us to be able to follow through with funding.
Yeah.
Yeah, I would just add that, I feel like most bankers are going to be respectful of your time and understand your situation and what you're needing. So I would say, approach it from that same angle. I mean, come at it pretty direct, pretty forward with what you're needing. I mean, like, Truist, for example, I know if someone comes at me, with a non-owner occupied real estate need, we've got an uphill climb with that. If it's owner occupied, let's sit down and let's dig into this and talk a little bit about it. So, come straight at them with that plan. And I think in return, you'll find out that they'll be pretty open and honest with you if it's a need that's going to be able to be fulfilled.
Yeah. Awesome. We're kind of coming up on the hour though. You guys have been great. I really appreciated everything. Any last words before we get going, Shelby?
Not really. I just appreciate the time. And as Keith and Chad have mentioned several times, remember, fraud's huge out there. Keep your eye on fraud. Keep your eye on risk. It's the biggest, most costly item to any organization. But thank you for having me. I had a great time.
Yeah. Chad?
Yeah, no, nothing else I can add. I mean, if anyone needs insight or, just needs an ear or needs to throw an idea up against the wall and see if it sticks, I'm definitely here. Like I said, me and Keith work direct with business clients every single day. And then Keith's also got a partner up there that, more for Michael's situation in that, over 250 space, that he works with as well. So, we try to work together as a team and try to do what's best for the client. And like Jeremy said, I appreciate what Jeremy said as well. I mean, ultimately, Truist may not be the right institution for the client, but if not, I think it's good to have other resources and partners and things we can push back to others on.
Mm-hmm. Keith?
Same thing that they all said, but I would just say, as a business owner, and just if you're looking for a need, don't be afraid to ask a question. The biggest thing is you hear is, oh, I didn't want to ask that because I thought I couldn't get it. Just ask the question. I mean, the worst someone can say is no, or not right now. So we're here to give those resources, to give that advice, that feedback, depending if it's a need right now or if it's a need in the future. So I just thank you so much for having us. If you guys have any questions, feel free to reach out, and I appreciate y'all's time. Thank you.
Mm-hmm. Jeremy?
Yeah, I'll piggyback on what Keith said. We all know what assuming does. It gets us in bad spots for everyone. And I try not to assume. I don't think anyone here tries to just make assumptions. It's the way it goes. Sometimes things are assumed and we got to walk back some certain things. But from the borrower or the client perspective, don't assume the answer is no. Don't assume that I can't do this. Don't assume that no one's interested in my vision or my dream. I mean, there's a way to bring it from a dream through David and the SBDC to a business plan and then funding. Sometimes the plan doesn't support the funding that's needed, and we talk about that, and that's fine. But no, I think we're all passionate about advancing our communities and adding value to anyone that's interested. That's what I'm passionate about. It sounds like everyone else here is as well, very much so. I don't want to make this a commercial, and I'll be delicate about it, but anyone that wants to reach out to any of us, I'm sure you can find us through the SBDC and David in Louisville, and would be happy to hear. And again, happy to get into some friendly competition with the Truist guys for sure, and gals.
Yeah. Yeah, we will send out a recording of this tomorrow or maybe the next day, and we'll have everybody's contact info. Reach out to these guys. They're great resources. We work with all these folks on a regular basis all the time, so you should too. So, well, thanks for joining us for another Toolkit Tuesday. Janet, thanks for driving the ship as always.
Sure thing, Dave.
And we will see you next week on another Toolkit Tuesday. Make sure you mark your calendar, and we'll see you then. And thanks, everybody. Happy Tuesday.